the underlying theme of my talk, I'm just going to run through some stuff quickly. I don't have any great crystal ball here because gold and silver are literally in uncharted territory. So who the hell knows? But one important feature of this market, it's become more and more evident over the last couple of months, is what I call outside money. And my definition of outside money is simply non-resource investors, typically people that typically invest in other sectors, invest in indexes, whatever. They don't usually go anywhere near mining stocks. They probably don't actually know that much about mining stocks. But because of the way producers, and I mean, look at Barrick's chart, look at Kinross's chart, look at Agnico's chart. It's just the way those stocks are behaving so well, even in relation to Wall Street that's not exactly having a crappy year itself, but the outsized performance of the producers, it's capturing attention. You're definitely seeing outside money coming now. I mean, I've seen that in placements. There's been a lot of financings, like a lot of financings in the last 2, 3, 4 weeks, and almost without exception, those financings have been upsized, and in some cases, significantly upsized, doubled or more. There's a lot of money that seems to be looking for a home, and we're seeing that. Here's the venture chart, and I won't bore you with why I don't like the venture index, but nobody really does. It's actually got some built-in negativity because companies that do well on the venture quite often graduate. So it's one of those indexes that's actually, normally you'd expect it to have some downward bias because of that sort of graduation effect, if you will. But if you take a look at what it's done here, it's up 65% since April. And I think it's important to look at these bars here. This is where you're really starting to see the outside money come in. And by historic standards, and keep in mind that the venture index is maybe 50% resource now. I mean, back in the good old days, bad old days, depending on who you are, it was mainly a resource index. Now it's maybe 50%, but it's still a very good measure, I think, of one, outside money coming into resource, but also a general, risk on stance, if you will, on the part of investors. They're willing to go farther down the food chain. They're willing to buy early stage stuff, and in some cases buy it hard. This chart here is also the venture index. It's sort of from 2010, early 2011. It's the last time I can say with, a lot of comfort that there were, I was around back then. I was around a lot longer than that, but I can definitively say back then you could see outside money from outside the sector coming in, and that gives you an example of the move that we had back then. That was 70% in 7 months. I've got no reason to think the current move is actually not going to be larger. This is, we're at 65% now. I think this move's got a fair amount left in it. How much I don't know, because I'm finding it very difficult to even guess what gold prices might ultimately do. I mean, I've been around long enough that I just sit there and shake my head watching new highs every day. I'm not exactly unhappy about it, but it's difficult to say, X is the price it should be at. I think we're just beyond that. I mean, it's getting an assist from the usual things. The US dollar's being quite weak this year, and that's by design. I mean, you've got a guy in the White House who's pounding the table saying he wants to see interest rates cut because of the tariffs that he instituted. We've seen some uptick in inflation, not a huge one, but enough to basically make rates that much more negative. And it's pretty clear the guy's, one way or another, he's either going to get his way in the next couple of months because payroll numbers continue to look weak, or he'll get his way a couple of months later because he'll put in a new Fed chair. It's pretty obvious Powell isn't going to be reelected when his 5-year term is up. So, and whoever Trump puts in place is going to be somebody that's going to cut rates, because that's pretty much the only thing he wants to see on the resume. And he's undoubtedly going to be, eliciting a promise from him that if I give you the Fed chair, you're cutting rates. That's the deal. That's your job. So the market sees that. That's part of the reason why New York is trading well, because expecting lower yields. That's always good for equities. It's helping gold and silver even more. The other thing that's helping a lot, and I think you can trace this back to, I think probably the time to trace it back to was Russia's invasion of Ukraine. And don't for a second think I've got any empathy whatsoever for the guy sitting in Sochi. I wish somebody would drop a mountain on his head personally. But when those sanctions came in, and the sanctions included, seizure of government assets and some quasi-central bank assets of Russia. And again, notwithstanding the fact I suspect most central bankers, are totally in agreement with Russia getting whatever it deserves, whatever it gets. But that still freaked out central bankers a lot, because a lot of central banks hold a lot of their reserves are held, in New York, for instance. That's just where a lot of those are held, and not just gold, treasuries, a lot of their reserve assets. And I think a lot of central banks said, okay, we got two problems here. One is we're going to have to lighten up on how much US dollar makes up of our reserve base. And the one thing gold's got going for it, and it's, everybody kind of sort of knows it, but it's not something most people even really think about. But it's I think, extremely important, and I think it's driving a lot of the buying. And that's that gold is one of the only asset classes where it's not someone else's liability. If you buy treasuries, you're buying an asset, but it's the US government's liability. There's somebody on the other side of that contract. Gold's one of the few things where you buy bullion, you stick it in a vault. Gold doesn't owe anything to anybody. It's sitting there. There's no secondary party or third party that can do any kind of repatriation. So that ability of gold to be one of the few asset classes with no counterparty, that's a pretty big deal. And I think that's driving part of the buying. And finally, not to put too fine a point on it, gold's, among other things, it's insurance against stupid. And there's no shortage of stupid around right now. And it's hard to judge where it's going to go because part of the reason why it's seeing so much buying is uncertainty. And you got a guy in the White House, you just don't know what the hell he's going to do from one day to the next. I don't think he knows what he's going to do from one day to the next. So there's no telling how this is going to play out. But to me, it just feels like, maybe we get some sideways, maybe we get a bit of corrective action. But I don't know where gold's going to top, but I think it's going to top. I still think it's going to top a lot higher than here, and I can't even believe I'm saying that. I'm a guy who's been trading gold stocks for a long time. I'm sitting here looking at 37.50. On the one hand, shaking my head, but on the other hand, going I just don't see a lot of negative headwinds here. I don't see a lot that's going to really roll this market over. I think you take the insurance against crazy. You take central banks that are, they're big buyers, and the list of central banks that are increasing gold reserves keeps getting longer and longer. That's a really big bid. So that gets your chart that looks like this. Is the 1 year weekly chart. I think it's a thing of beauty. I mean, that's some breakout we just got. I don't know where this breakout tops. I mean, I keep expecting to see a pullback and wake up the next day and look at the market and it's up another $30-40. So I'm not gonna get in front of it. I'm just happy to see it happening. Here's silver. I mean, silver bugs were an unhappy bunch until a few months ago. Silver was not getting anything like the move gold was. That seems to have changed. I know a couple of guys that think this is central bank buying. I'm skeptical about that. Maybe it is. Maybe there's some central banks picking up silver as a secondary reserve asset. I don't think that needs to be the case. Silver is just sort of getting lumped in with gold, and I think you've just gotten to the point now where there's enough buying that's really starting to move. We've got a strong breakout here. I think we see all-time highs for silver here pretty soon. There's the dollar index. You can see what it's done in the last year. That's a big move. I mean, to have the world's reserve currency drop 12% in a year, that's a very big move. And I don't see any particular reason to expect a lot of strength from it. I'm not sure the U.S. is going to have a recession. There's some concern about that for a couple of months recently. I don't know. I mean, to me, it feels growth is definitely slowing in the U.S., but so far, most of the readings I think are contradictory. So I'm not assuming yet that's going to see a recession. I mean, obviously, if it does, that's just going to whack the US dollar index even harder. Again, it's just more gold positive stuff. You've seen a downward, you saw more downward move in bond yields as well, and that that just basically went along with the jawboning that you're getting out of the Fed. That seems to have bottomed out, at least for now, because CPI has gone back up. But again, if the White House can push the Fed to do a couple more rate cuts, obviously it's going to pull yields with it. This is a one-year copper chart. That's a heck of a strange chart. You got that Looney Tunes stuff in the middle that was basically due to tariffs. The market thought there was going to be a big tariff on importing copper, so the copper price simply adjusted to include that tariff price. And then when it was clarified that no, that's not going to happen, it got whacked all the way back. It's trading fairly well. The one thing that's helping it, if that's the right word, is you are seeing big supply side issues. And most of you probably saw the story out of Grasberg. Grasberg had a big, well, it's not a landslide because it's a bulk underground mine, but it was basically a wet material slide, and it sounds quite bad. It's the kind of thing that I don't know how long that's going to take to fix. It could be a very long time. I mean, it could be forever. But I mean, Grasberg is a couple of % of the world's copper output. So I mean, it's not chump change. You see a couple of things like that happen, that really helps underpin the price. So copper's trading better than I was a little concerned, just because I was worried about economic slowdown. And although we're certainly seeing that in Canada and a few other G7 countries, it hasn't really hit the States yet. And with these supply disruptions, copper's got a pretty good bid under it, thanks to, as much as anything, thanks to supply disruptions. And as always, it just takes a lot longer to find and permit and build a mine than anybody really thinks. It's just really hard, getting the supply of any metal up by 30 or 40 or 50%. And that's what they've been talking about over 10 or 20 years for copper with electrification. That's really, really, really hard to do. And there's no way it happens unless copper is trading up at 4 or 5 or even more. You simply won't get that much supply on stream. Otherwise, you need to have those prices. So, like I said, the evidence of the weakening U.S. economy is kind of there, but it's contradictory. So I'm not totally buying into that. CPI has, moved up a little bit. It's almost 3% now. Trump announced a random bunch of tariffs yesterday. They were on products rather than countries this time. So, I mean, who the hell knows? I mean, I'm working on the assumption we're going to see, elevated tariffs, and in some cases very elevated for some time. So with that kind of a backdrop, I don't see how you get the CPI down. You might get it to flatten out, but that's as good as it's going to be. And I think there's a real possibility inflation goes to 4 or 5%, in which case real rates will be very negative. And that's, again, that environment is nirvana for gold. This outside money, I think as long as we're seeing gold and silver trades this way, and as long as we're seeing enough crazy out there, there's certainly room for more of it. I don't think we're done by any means. Relatively speaking, in terms of dollar volume, there's still a lot of room. Non-resource asset holders, they own orders of magnitude more assets than people inside the sector do. So even a small percentage increase in the portfolios of all those people, that's a massive amount of buying in relation to the size of the sector. Don't be stupid about it. Things have really big moves. I mean, you try to make a habit of taking money off the table. I'm my own worst enemy when it comes to that advice. I tend to not do it, but I always tell other people to do it. And like I said, I'm not saying I'm seeing an end to this move. I think we could see these outside money flows for a while, but with big moves, every now and then, you got to trim things a bit and make sure you've got a cash balance. You've got money in place so you can be a buyer when a really good deal shows up. But I'm not, even given that advice, I haven't been in a rush to sell things because it just seems like every time I turn around, things are moving up 20 or 30%, and that's new buyers coming in. You've seen a lot of guys do financing, so you'll see some financings freeing up in the next month or two. But, most of the ones that are getting done right now, some of them are life, but a lot of them are 4-month placements. So none of that stock's going to see the market for 4 months. So, my gut feel is we're going to have barring some minor corrections here and there, I think we're going to have a pretty good rest of the year. So be fruitful and multiply. Go out there and buy some stock, and let's all make some money.